Do you have a mental structure, a psychological structure that you follow?
When self-doubt happens, then certain parts of your brain take over and your emotions get involved.
Any kind of misbeliefs or misconceptions that traders should stay away from?
Developing strategies, writing down those strategies. They have to be rules in front of you. Journal every day, journal every entry.
When a couple of stocks didn't work out in your favor, how about you thinking about them in your mind?
If I'm using a strategy and I'm on a bad streak, is that the strategy or is that the market at large?
Welcome to the Trading Map podcast, everyone. Again, where we break down market structure, risk, how you can endure a long game of trading, and how you as a developing trader can continue to improve. Today's guest is Keith from Chicago, who has been trading US equities for almost 3 years now and growing strongly on his trading journey. In this conversation, we cover the core fundamentals of his positional trading strategy, important lessons from his trading journey so far, and practical insights for traders who are looking to get better in their trading journey. If you have your notebook nearby, this will be a great time to take some notes of the key ideas we'll be discussing here. Let's jump right into the conversation. Hey Keith, good afternoon. It's 3:30. I think we are about to close on the New York Stock Exchange. Thank you so much for jumping on. How are you doing in general? How was your day today, and how's everything going?
Today was fantastic. This week has been great. The last couple of weeks have been fantastic as we all are recovering a bit from when the market took a bit of a downturn when we began this issue, I will call it, with Iran. But so I've recovered. Many people have been able to recover. Add on top of that it is earnings season, so things are coming and
It
going
is.
because of that dynamic as well. So thankfully those have been working out well for me. Also, we can talk more about this as this conversation goes on about when I choose to or don't choose to hold my stocks through the earnings call.
For sure. And I think we had big four, big five earnings came. I think they came just the end of last month only. The alphabets and a couple of these big names, and it was crazy. I mean, most of them were like gap ups and gap downs. I think Meta is still getting beaten hard though. It's crazy. Yeah, I mean, how do you feel about the earnings season though, like in general?
Well, it's interesting, and especially Meta and all of the Microsofts and the Googles and what have you. They're back and forth. It's season to season. We're having a hard time guessing which companies. It was a year ago, and everyone thought that Google was horrible, and Google's never going to lead the market in the AI race. And here comes Google now.
It's
So
at all-time highs again. It's almost hitting the highs. And I think chips and semiconductors, they are still, hitting the pack. They are still the ones outperforming everyone. You look at, I think yesterday we were having conversation over Micron, over LinkedIn. And so that was at all-time highs, and then new trends, new breakouts. And then today, Intel, it's going crazy. We didn't take a trade today though in Intel, but it's up like 13-14% already from the open.
yeah. There's a lot of those doing that today. I've got a few today. So I have a few accounts going. One of them is my primary trading account. The other one is a Roth IRA. So
Got
I'm
it.
running a strategy right now, or for this year. The Roth IRA is all ETFs. My trading account is primarily singular stocks, occasionally an ETF. After today, the ETF may have caught up, maybe leading this year so far. There is Breakwave Tankers, the ETF, BWET, BWET, shipping tankers, up 23% today. So there's a bunch of those happening. That is all about tanker shipping these days, the Strait of Hormuz, and all these sorts of situations that are really ramping up the prices for shipping. So that is showing. And in the various strategies I use and metrics that I use, all the various tanker shipping stocks have been showing up lately and showing up lately. And rather than choose between them, I just chose to go with the ETF. So
Got it. Interesting. And and of course, I think like we are going on a tangent here. I think we'll have to come back to the intro first very quickly. If you want to just quickly share a bit about yourself and from how much time you're trading now. And of course, I know that you have been trading in equities predominantly, like that's your main area of focus. So a bit about, from how much time you're trading and which markets and the kind of trading style, like you are both intraday and positional or just one of those. Yeah.
Yeah, sure. Um, I've been investing for a good number of years now. I started trading a couple years ago, back at the end of 2023, so we'll call it 2024. I resigned from my job. I spent my career in facility services, facilities management. I resigned from that
Mhm.
job. I'd been good at what I was doing. I was sure that I'd find a new opportunity that suited a small transition I'm looking to make in that career. And I watched the savings account go and the savings account go as I'm getting rejection, rejection, rejection. So the savings account is going away, but the bills are still coming in. So I'm like, well, what am I going to do? So I started
Correct.
looking. As that I've been investing for several years and
Correct.
made some great trades along the way, or some great investments along the way, like Nvidia, for example, which I bought in 2018. By 2024, that had done very well. So those sorts of things, and I developed a decent amount of capital. So I said, what can I do with this capital? Or what strategies can I use with this much capital to get the monthly return I'll need to turn this into how I'm paying my bills?
Mhm.
So started reading and learning and thinking and asking AI tools that exact question. If I want this percent return a month, XYZ, what kind of strategies can I find? So I started learning about and looking into options um, and and trading. And I'm reading options and options, and it's promising in many ways, but I keep coming up with this in the back of my head is just risk management, risk management, risk management, risk management. And so as I'm reading and learning and getting more into trading, I started reading more about Mark Minervini in particular, and he recommended
Mhm.
through reading his books, I started reading Jesse Livermore and Nicholas Darvis and some of the some 100-year-old traders
The
really.
most popular ones. And Keith, like it's very interesting. Like you are in the starting of your trading journey, right? And of course, you have been investing, and that has been working out well for you. At the same time, intraday trading, it's a bit of a different kind of let's say field to enter into, right? And you really have to equip yourself with the right. I think you're winning the consistency and the edge will come from the research first, right? I think investing a lot of time and in general, like intraday, there are majorly two main kind of structures that are kind of like more popular. One is like you are either you are looking to trade retracements, right? Or you are looking to trade breakouts in general. And then there are 10 other systems you can build around this. So, how about you? Are you building your strategies in one of those categories or some other area?
We'll kind of get back to your kind of defining, I suppose, how most of my trades have ended up working out. My average holding time is just under 10 days, and my average return is about 4.5%, which, if I'm fully invested at that return over the course of a year, is about 150% return. That's not so bad. I would take that. But to find those stocks and develop this strategy, I'm a momentum trader. So I'm looking for stocks that are already on the move. I'm not trying to invent the momentum. I don't need to do it first. I'm glad
Yeah,
someone
yeah,
else.
right.
I'm glad someone else has already done that work for me. Uh, so I start by looking for stocks that have made 2% this week, 8% in the last month, and 25% in the last quarter. So I start there, depending on how the market's going. That may dwindle the numbers already down enough. If not, I will also include um, have to have had a 20% increase in the year over year return. And if that list is still too large, I will look for return on equity as well.
Hmm.
slowly pulling
Got
those
it.
numbers down to a manageable number of stocks that I can investigate and research and look more deeply into which one I actually believe in for the long term.
Mhm. I see. And so it's like your strategy is not like then purely intraday. It's like more of a positional trading that you are focusing on. I'm really just trying to understand like which are you like, closing, getting in and out quickly on the same day. It's more of like the positional where you are holding the trades for a couple of days to a couple of weeks.
I will I will hold it for as long as it cannot sell itself. I put in an 8% stop.
I see.
So if it, when it sells itself, then it's done.
Got it, got it. And and at the starting of this conversation, you mentioned that you transitioned, from the job, and of course, you embarked on this adventure of actively trading as well, which I think in itself is great. If you can really, ground yourself in it, and you can find, let's say the right systems and the right setups, I think there is a lot that can be done here. And something that I'll keep reinforcing again and again to put in some energy into the system that, you can actually create success. And it's just a matter of time, like, really sticking to it and constantly learning. I mean, just collecting the data, maybe having like your whatever systems or whatever strategy you are planning to work on. I mean, we have the history and we have charts and we have data points, and we can always go back and that same strategy, if we build up two, 300, 500, or even let's say 1,000 screenshots of that same strategy, and you save them somewhere, right? It will give you a clear picture of how the strategy is working. And then after that, I mean, you just simply go ahead and tweak. And what, there is a guy he works with SMB Capital, and he is working in, building automated systems, like something you can automate, and you don't have to actively kind of sit in front of the system every day to execute. And what he says, I mean, I just really like it so much. What he says is that you build out your, let's say, your screenshots and your data points, and you just take out the conditions that are not working. You just continue refining and continue taking out those conditions or situations that are not working, and eventually you get to something that is working, right? And he say, and yeah, and he says that if you just do this, build out a data set and just refine the ones that are working and not working, and the goal is to get to the ones that are working and just do more of those with the right psychology and risk management. That's the way to go.
100%. I couldn't agree more. And that is why I and every single person I've ever listened to or watched a video or listened to a podcast, what have you, about trading, it is all about journaling. Journal, journal, and journal. What did you buy? Why did you buy it? Why was it successful? Why was it not successful? Learn from every one of those. By learning from those, for me, learning from them and feeling good about what I'm learning is the way I'm not thinking about it all night long while I'm in bed, not able to go to sleep. You have to think about it, sort it out, move on. It's behind you now. You've learned from it.
Yeah, right. And eventually refine your existing system out of it. Right. I think that's the goal. And on top of that, one of the things that will always play out is the psychology part of it. And like you were mentioning at the starting of the conversation, which is like, you go through the emotional roller coaster of when days are positive, you feel invincible, like I can do it. I'm going to be one of the best traders. And when couple of setups are not going your way, then like the doubting will come into the picture. And if just we get over these two things and just consider that at the end of the day, execution is the king. These emotions are coming in our head, not in the market. Market is just presenting the information, and it's up to you to decide which opportunity I want to take and which one I want to pass, right? So, but yeah, I mean that's a great insight from your end. Let's get a bit into, let's say, so do you have like a, I mean, you mentioned a bit about this. Do you have anything else, like you mentioned, when you're building your strategy, you are looking for certain percentage moves, and then you're refining your systems. Do you have anything else, like any other conditions or any other scenarios that you look for?
Yeah, sure. So when I'm looking at charts, I switch back and forth, but I lean really heavily on Heikin-Ashi candles that show the 3-day average candles that way. They're really good at understanding momentum. Um,
Right.
when I see that when I see that momentum happening, I will switch it over to more traditional candles to understand why the Heikin-Ashi looks the way it does. Um, but I use those a lot. So I'm looking for a certain Heikin-Ashi. I want to see 3 days in a row of the candle with a good wick at the top of it. Those are good signals. It's going to keep on going. So I look for
Mm.
that. I look for an upward MACD, and I look for RSIs, and I look for the volume.
And if those conditions are aligning, generally, how are you kind of like, what kind of risk reward you're looking for in general in these trades? What's like your average there, in terms of the risk that you're putting on, and the targets that you're trying to hit? What's kind of like your average on that front, and what do you consider in general that, hey, for me to really generate and grow my trading business, keep that something I really believe into trading. It's a business, and you should consider it as a business, right? And just a bit of encouragement on that side. It's one of the best games, right? But your risk reward, getting back to that.
Yeah, you know, when I started, and I still use it for the most part, and one of the first books I read was Bill O'Neill, who developed IBD, Investors Business Daily. So I use his method basically, which is each of my trades risk 1% of my capital, which then means that my portfolio ever only has 8 stocks in it, which is a great number. I can manage 8 stocks. I can keep track of 8 stocks very well. When it becomes
Mm.
more than that, it becomes more difficult to really keep track of. But along those lines, I like to talk about what I mean by keeping track of how much time I want to be spending. I'm always reading, listening. I pay attention to the market all day. I know which sectors are
Right.
moving, which ones are not, what have you. Um, where was I going with that idea?
The risk reward eventually, like so let's say you are risking, let's say, 1%
Yep.
of the account. So what kind of target you are having in your mind? Say, I want to make like 3%, 5%, or maybe based on your past data, what's like the average that's coming out?
Well, as I said, my average return has been about 4.5% after 9 days, but I don't have a limit. I've got a stock right now that I mentioned to you before, NLST Netlist, that is
Right.
up 64% for me right now. And I'm going to keep riding
Mm.
that out for as long as it can. At the same time, I want these stocks to achieve 2% a week. If it starts falling behind, I look into
Mhm.
why. Is this going to keep on moving sideways for longer than I anticipated? Did I enter at the wrong time? What have you? Um, and even if it is green, but it's not green enough after 2 weeks, 3 weeks, I will
I
sell
see.
it and buy
Uh-huh.
something else that is going to have a better return in faster time on my
Got it.
capital.
Great, great. Something really important that I want to delve into, which is the losing streaks. And in general, like you are having, most of the traders, they're having a structure in their mind in terms of when there are losing streaks, when things are not going the way we planned initially at the time of taking the trade. Do you have a mental structure, a psychological structure that you follow? So, like for example, let's say I'll give one of our examples. Is, let's say we are in a trade, and we know that in one row we can get up to 4, 5 trades wrong as well, because our strategy is aggressive, and we are getting in and out quickly, and so it's something that we know already, from the structure and from the past execution. So and so we just don't bother, in terms of hey, do we need to look back at a strategy and reanalyze it or not? Or do you have a specific structure, like when a couple of stocks didn't work out in your favor, or a couple of trades didn't work out in your favor? How about you thinking about them in your mind?
Sure, that's a great question. And part of that, I mean, there's so many ways to think about that. If I'm using a strategy and I'm on a good streak, that's wonderful. If I'm using that same strategy, I'm on a bad streak. Well, let's look at why. Is that the strategy or is that the market at large? And I should be on the sidelines right now, but I was choosing to be in. Is it me problem? Is it a market problem? Is it both of those things? As I look back at my strategy and it was working, last week or last month, that strategy was working, but it's not now. Is that based on the sector that I'm in, perhaps? Did that strategy work better for a certain sector? There are various reasons that could be happening, but that awareness of looking at various strategies, the various reasons, really trying to figure that out is much more effective than jumping into the blame game. As you mentioned, when you get into that self doubt is a really dangerous place to be because when self doubt happens, then certain parts of your brain take over and your emotions get involved. And that is when some
Yeah,
unfortunate choices and bad decisions be made. I've done that before where I have pulled out my stops. I didn't want it to sell because I was sure that it was going to bounce right back. And of course it didn't. And you end up eating more than you would have otherwise. So you learn the hard way that ways. But I've been there. And I did it once and thought I learned my lesson. And then a few months later, it happened again, and I did it again. And I said, "Oh, you didn't learn from that lesson. Oh, well, this time was different."
right.
No, this time was not different. The truth in all of those different moments is that there are a million unknowns you don't even know the metrics for, so you can't judge them. So don't think that you can predict the market all of a sudden. Stick with your game. If you have an 8% stop, stick with that 8% stop. Do not deviate.
Yeah, right. And at least like your basic, risk management strategies and systems, you want to stick to those. I mean, you figured those out after doing your research, right? And now doubting it and going back and forth with it, it's just not going to build up the consistency. So if you know that the system works, then it is very important to stick to it, even in the ups and downs when markets are not aligned. And generally, if you look at the market, I mean, markets are changing mostly in volatility. It's changing in the volumes. It's changing in certain let's say news and announcements, and kind of like these are generally the volatility will be changing, and the trends will be changing. And if we can just zoom out a bit and just look at the broader picture of what has changed this week or last 2 weeks, and just get in rhythm with it again, I think you can bring things a little bit more better on track. And which kind of like really brings me to another question, which is, let's delve a bit into your like daily habits and routines of trading before the open. Are you in front of the market right into the morning every day and ready to go in, and you have some amount of research done in advance? Do you have a certain checklist that you will look for? But and I know I don't want to put words in your mouth. I just in general your daily routines and habits of starting the session.
Sure. I've cheated from this one as well. But generally, my rule is that I trade from 1 o'clock to 3 o'clock. So I'm actually at my desk working from about 1 o'clock till 4 o'clock. Because after the market closes, I have other research and I'm filling in my journal and placing stops and those sorts of things to do. For the rest of the day before then, CNBC is always on. I always hear the background. I always know what's happening in the market throughout the day. I'm reading articles throughout the day, but I'm trying to accomplish other things in life as well. So I keep these screens turned off in the morning because if these screens are on, I'm glued to them all day long.
That's true. It's really difficult to get away,
Yes.
from the market. There is some amount of action going on at any point of time, and you mentioned one, two, three. Yeah, please continue first.
Not, I lost track there, so please go on.
Okay, so you mentioned like one, two, three, like so that's the afternoon kind of session you are getting in, and that has more to do because Your trades are more of a trades and holding opportunities that you try to trade in, and so that's kind of, now I can see that's like the positional trades, and you are setting up like your stops, let's say for the upcoming session, and just looking at the closing in terms of whatever you expected, whether the markets are following those conditions or not. That's generally you are looking at those situations.
Yes, I've got a bunch of stock screeners that are already set up that as soon as I jump on at
Mm.
1 o'clock, they're ready for me. They're showing me what's available today, which stocks are matching my criteria. So I can see that list is usually down to about 40 stocks, usually fit in the metrics that I follow. So I can
Mm.
scroll through those and see, well, I scroll through those and then I look at which sectors they're in. I might choose a few of those sectors to focus on. And then at the end of the
Mm.
day, I can reset that as well to look at where all the stocks end of the day. So which ones might show up tomorrow first thing? Which ones are new on the list? Which ones have come up? Which ones haven't been able to match all my metrics before? I look at those new ones that show up because that could be the beginning of another trend.
Great, great. I think very important question for for new traders. You have been on your journey now, almost 2 3 years in. Any kind of like advice, or I'll say just in general, any misbeliefs or misconceptions that when traders are entering into the market, their expectations are through the roof, and you kind of you learn your lessons quickly, that hey, I have to be more realistic here, and I have to put in way more time and way more research than I initially thought. So your experience in the last couple of years on any kind of misbeliefs or misconceptions that traders should stay away from, at least understand that hey, like these things are going to help you in managing your expectations a bit more.
Sure. That immediately makes me think about what we all experienced going through COVID. During COVID is when a whole new population of retailers showed up. All the retail traders really began to show up, and that is also when a lot of people got into options at that time. And a lot of
Yeah.
people that haven't done all the research you mentioned necessary had a very difficult time in options. It's a very complicated risk management side of trading that I didn't want to jump into yet. Anyway, down the road I may, because long term options are interesting to me. But that's a whole other idea for the next thing I'm learning about. Developing strategies, writing down those strategies. They have to be rules in front of you. Journal every day. Journal every entry. When you are
That's
looking up, when you are comparing
that's great
stocks,
advice.
be writing all of those in your journal as well, so you can compare them eye to eye and see all of their put to call ratios compared to one another, the market sentiment comments compared to one another. Really understand how they all relate to one another, so that you're choosing holistically between them. If you're only buying one out of three choices, for example, but
Right.
uh, rules, journals, and stick to the rules.
Great, great. And I think you're already aware about this. Maybe so SEC and and a couple of these other regulatory authorities, they have rolled out a new circular about the PDT rule going away, in the next month. So I'm sure you have read about it. Are you aware about it?
Uh,
The PD rule under $25,000, and you can take couple of trades in a week. That is, it's going out for the first time in the last like history of 20, 30, 40 years of the markets. The rule will be going away. I think the minimum threshold will come down to $2,000 if you want to take intraday trades, and then of course you can take unlimited number of trades as well, because the settlement will be done faster. So I think now this will attract a load of new traders as well again, because the minimum amount of investment that is required, that will go away. It's just the basic bar will be too low, and I think that's going to push a lot of volume into the market again. Like you are mentioning about COVID, I think we'll see another influx of traders hitting the market again.
Yeah, and it'd be interesting to see what the impact would be. For example, when I do taxes every year, I'm not a trader because I'm not a day trader. I don't trade enough every day. So it's interesting to see how that happens, how that unfolds. If people want to be registered to the federal government as a trader or unemployed slash self-employed like I am. So
Yeah, but I think that I think it's a great opportunity, Keith. I think it's just initial like 2 3 years really managing, let's say your and I'll say like I think that's more of a short timeline, but initial 3 to 5 years is where you really need to stay into the game, and you want to have some amount of other sources of income, so you're not putting too much pressure in the learning phase. I think if just the traders can adapt to this and not putting too much pressure at the starting phase and focusing more on really learning the market structures, right? I think that's where the advantage is for traders. But yeah, I mean, I think those are really some of those are really great piece of advice there. Just one last quick question: what do you think, whether the traders should go full time or not, and when? Because you have done this transition in your own personal journey. What will you advise from your perspective?
what was the initial question?
My question is that whether the traders should go full time or not. If yes, when? When it's like a better time to go full in.
That's so hard for me to answer because I was forced into it at some level. I started this in 2024, kind of for the most part. I really started in 2025, and that was an okay year. 2026 is off to a good year. I am 64% of my trades this year have been successful. I'd like to ramp that up to 75%. I believe that's too low right now. But even with that, I'm getting that 4% return in 9 days. My yearly return would still be good at 64%. But
Mhm.
I'd like to ramp that up a bit.
It's great, Keith. I think I really appreciate your time. I think it's a great conversation, and a couple of great insights as well. For the new and developing traders. And I'm really wishing you a lot of success, a lot of learnings. Some hard situations as well, so you can really get better. Also, it's going to happen anyways. But I think the journey is great. For some people, it's a little short. For others, it's a little more longer. But if you just really stick around and focus more on building the right strategies and systems and data and research, and work more on the psychology and sort of risk management. I think the rewards are great. Something that I'll share from my personal experience. But great chatting with you today.
Thank you so much, Ramesh. It's such a pleasure for this invite. It's a pleasure talking to you. I'd love to do it again anytime.
So this brings us to the end of today's episode, everyone, and I will wrap things here. I want to take a moment and quickly thank the sponsor of this podcast, Bull Street Edge. Bull Street Edge is a trading technology company built for serious traders who want to improve their process, performance, and decision making. They offer a lot of powerful tools, including a trading journal, AI trading coach, charting tools, research watch lists, and access to a growing trading community. If you want to sharpen your trading edge and become more structured in your trading approach, definitely check them out. I will leave their link down below in the show notes. If you really liked this conversation, be sure to like, subscribe, and share it with your fellow traders who are focused on improving their trading career. I will continue bringing on a lot of great guests to help you make more informed and disciplined trading decisions. I'll see you in the next episode, and until then, stay focused and be great.